A broad but modest rally lifted most U.S. stocks on Monday. Wall Street continues to build on 7 straight weeks of gains, fueled by optimism of interest rate cuts by the Federal Reserve in 2024. The Dow ended flat, while the S&P 500 added nearly half of 1%, and the Nasdaq rose 0.6. Scharf Investments lead portfolio manager Brian Crowes says he thinks stocks will experience smooth sailing in the near term, but he remains concerned about what could happen in 2024.
We think things are going to be constructive for a while. Next year, as potentially earnings disappoint, if we have a recession, and if the higher oil prices coupled with ongoing geopolitical risk could create a problem for investors. But at least right now, we think investors are going to continue to push stocks higher.
Fed presidents tried to rein in the enthusiasm Monday, with Chicago Fed President Austin Goolsbee warning that the central bank has not pre-committed to cutting interest rates anytime soon. And Cleveland Fed President Loretta Mester said financial markets had gotten a little bit ahead of the central bank with respect to the timing and extent of rate cuts. Stocks on the move included shares of U.S. Steel, which surged 26% after Japan's Nippon Steel agreed to buy the company for nearly $15 billion. And shares of VF Corp fell 8%, following its announcement that unauthorized activity on its computer system affected the Vans sneaker maker's ability to fulfill some orders.
Wall Street's main indexes ended mostly higher on Friday, notching their 7th straight week of gains, breaking records along the way. The Dow added more than 0.1% to hit a record close for the 3rd straight day. The S&P, while flat, notched its longest weekly winning streak in more than 6 years, and the Nasdaq, which added more than 0.3%, closed at its highest level in nearly 2 years. But comments Friday by New York Fed President John Williams, who said it was too soon for the central bank to be talking about rate cuts, dampened some of the optimism. His remarks came just 2 days after the Fed, in its policy statement, signaled lower borrowing costs in 2024, sparking a rally in stocks and bonds, pushing yields lower. Luke Stone is senior investment analyst at Winthrop Capital Management.
The 10-year Treasury fell nearly 45 basis points since Wednesday. And I almost think that Fed speak, to a certain degree, can be a policy mechanism. And this might have been a way for Governor Williams to help temper back some of the hope into bond investors. We're seeing rates almost at mid-spring levels, and it's an unprecedented whip in Treasury rates. So this could have just been a mechanism to help kind of put investors back in line.
Among individual movers, shares of Costco jumped 4.5% after the retailer topped Wall Street estimates for first quarter results due to demand for cheaper groceries. And an index of semiconductor chips had its biggest weekly gain since May, with Broadcom and Intel each gaining more than 2%, and Nvidia up more than 1%.
Stocks rallied Wednesday, with the Dow Jones Industrial Average hitting a record high after the Federal Reserve signaled lower borrowing costs are coming in 2024. The index surged mid-afternoon as the Fed issued its final policy decision of the year, and Chair Jerome Powell said the central bank is not likely to hike interest rates further. The Dow, S&P 500, and Nasdaq jumped about 1.4% each, with the Dow closing above the 37,000 mark to notch its first record high close since January of 2022. The Fed held interest rates steady following a 2-day meeting and indicated it sees rate cuts coming in 2024, something that pleased markets, according to Carol Schleif, Chief Investment Officer of BMO Family Office.
Markets have clearly expected that to start in the spring. We're not necessarily sure it'll start that soon, but at least directionally, the Fed has signaled that the next move, whether it's in the spring or early summer or late summer, that next move is most likely downward and not upward again. And so that's what markets are responding to, that directionally the Fed seems to be aligning with where markets had presumed they were going to go.
Stocks on the move included Pfizer, which fell 7% after the drug maker forecast 2024 revenue below Wall Street expectations. It dropped to a 10-year low during the trading session. U.S. stocks closed at fresh year highs on Tuesday after inflation data came in near expectations. Consumer prices rose slightly in November when they were expected to hold steady, though they grew 3.1% on an annual basis, matching forecasts. The Dow and S&P 500 added about 0.5% each, while the Nasdaq climbed 0.7. Markets see the Federal Reserve keeping interest rates on hold Wednesday after a two-day meeting and predict the next move will be a cut, now expected in May. Retirement Planners of America founder and CEO Ken Moraif said there is still a chance the Fed could go the other way.
We still have the risk that the Fed may have to raise interest rates again in the future, although that risk is declining, and therefore we see that as becoming less and less of something to be concerned about. And actually, interest rates staying where they are for a longer time than maybe the market is expecting is probably a more likely event because of that.
One stock mover of note was Oracle, which plunged 12% after it forecast third-quarter revenue below estimates due to the uncertain economy and competition in the cloud computing market.